Good afternoon and welcome to the Morrows Monthly update for March. Last month we saw continued volatility as the US Federal Reserve indicated that it may raise interest rates sooner rather than later. Volatility around the Ukraine was also heightened, and we've also got concerns over a deflationary outcome for Europe and also continuing weakness out of China. The Australian equity market was marginally positive for March, and global equities were relatively lacklustre, with Europe up around 1%, the US flat, and both Japan and China down around 1%. Global bond yields rose slightly during the month, the one exception being Europe, which saw its yields fall. The benchmark US 10-year Treasury yield rose slightly to around 2.7%. Commodities were mixed, with oil prices down around 1% and gold falling 2%. Iron ore prices staged a late recovery in the month after having some fairly severe falls intra-month. The US dollar strengthened against most major currencies, although we did see the Aussie dollar rise by around 4% relative to the US dollar. The Aussie was also stronger relative to the euro and the pound. US economic data was better than expected in March. Whilst manufacturing fell slightly, the services sector picked up. Retail sales and industrial production were also stronger than expected. Employment growth came out relatively strong, and fourth quarter GDP growth was revised upwards to 2.6% year on year. Data was mixed out of Europe, with manufacturing and industrial production weaker than expected. However, the services sector and retail sales picked up. Inflation coming in at 0.5% for the year remains a concern. Chinese economic data generally missed expectations, with the manufacturing sector contracting. However, the services sector did pick up slightly from two-year lows. Trade data, retail sales and industrial production all missed expectations. In Australia, the manufacturing sector contracted for the fourth consecutive month. However, the services sector did see quite a strong pickup. The unemployment rate remained steady at 6%, and GDP growth came out at 2.8% year on year. We did, however, see a slight fall in business and consumer sentiment. At its April meeting, the RBA left interest rates on hold at 2.5%. We've been warning for some time that volatility is likely to be higher into 2014, and so far this has proven to be correct. We've also started to see some macro issues re-emerge, particularly around Europe and China. Adding to the uncertainty is the US Federal Reserve continuing to taper stimulus, and also the mixed messages they're providing on the outlook for interest rates. As we move forward, focus will shift to US corporate earnings, and what we've seen in the past several years is a lot of PE multiple expansion. The markets are really looking for top-line revenue growth to provide the next leg up going forward. The outlook remains challenging, particularly in light of the uncertainty around central bank policy actions. And in the current environment, we're not recommending any changes to our existing portfolio strategies. We thank you for taking the time to listen to this update, and we look forward to talking to you again next month.